And joining us now is Dave Hebert, Senior Research Fellow with the American Institute for Economic Research. Dave, thank you so much for coming on today. Let's dive into these tariffs, y'all, right? How is President Trump, or how might President Trump's tariffs impact the U.S. economy in the short term? I mean, is this going to depend on how different countries respond to the tariffs?
So it's a great question. And at some level, we're going to have to wait and see. What I can say is that tariffs do raise price for American consumers and American producers. We've seen this every single time that tariffs have been used. Now, this doesn't really bode well for American manufacturing jobs. Making it more expensive to produce our products is not a recipe for economic success. That we see a really positive and frankly, fantastic jobs report this month is encouraging. But what we saw were a lot of jobs being created in heavily government subsidized industries like healthcare and transportation. And so while we are moving away from having a very heavily dependent economy on government spending, we're still not quite there just yet.
So for the consumer, for the everyday American, what impact could they expect to be seeing in the immediate future?
So in the immediate future, we're going to see a lot of things remain kind of the same. Firms do tend to have long-term contracts with their suppliers. And what we're going to see are a lot of firms absorbing the cost of these manufactured goods and other consumable items through reduced profits. Now, this is what we saw with the 2017 tariffs on steel and aluminum. What happens after those contracts expire, however, and they are open for renegotiation, is that we see these products become more expensive to the consumer. So rather than lowering prices, which is what we sorely need at this point, a lot of our goods are going to become more expensive. This is going to be very difficult, especially in light of today's report, which reported that at least a 2.4% decline in median weekly earnings per household as compared to 4 years ago. Now, a lot of that is, of course, due to the incredibly high inflation we saw over the last 4 years, but inflation is still remaining higher than the Federal Reserve wishes for it to be. Complicating this is President Trump's tariff policy, which has gone back and forth for the last 2 months, leaving Jerome Powell in a tough spot where he can't really try to manipulate the money supply to combat inflation, rather than seeing himself risk causing a recession through ill-timed monetary policy.
Go deeper here for us, because we did see Fed Chair Powell speaking today. He didn't directly address what President Trump had to say before he spoke about this being, the perfect time, according to Trump, to cut interest rates. What did you make of that?
So what I made of that was Jerome Powell acknowledging sort of the chaos surrounding this tariff policy. On the one hand, we've got President Trump saying that he's open to negotiations, but everyone else in his administration is assuring the American public that this is not a negotiation tactic. So the American people and, frankly, Jerome Powell are left wondering, what exactly is this tariff policy and what exactly is the goal here? Is it to negotiate lower barriers to trade for everyone? If so, that's great. Is it to try to maintain these high tariffs on every economy? Maybe, but we just don't know. So until there is some clarity here, I think Jerome Powell is left in a bit of a holding pattern where, Trump is right. It's a great time to cut rates if we can get the commitment from this administration that these tariffs are going to be here to stay. If they're not, well, Jerome Powell just has to kind of wait and see like the rest of us.
Now, as you mentioned there's this certain uncertainty here, right? Whether it be how these tariffs are going to play out or what President Trump is going to do next. But as we're already seeing, Vietnam's already come out, the first country to state that it wishes to negotiate on tariffs. Which other nations could you expect to come forward next?
So the nations that are the most likely to come forward are those that are relatively small compared to the U.S. and that rely very heavily on U.S. imports and exports for their overall economy. So this would be countries like Canada, like Mexico, El Salvador, Colombia, Italy to an extent. We could possibly see Australia capitulate. There are a number of countries that could come to the table and offer lowering their trade barriers in return for lowering our trade barriers. Countries like China, the European Union, even the UK to an extent, are much less likely to do so. Their economies are much more internationally diversified than these other countries. And so the fact that the US imposes a tariff on, for example, China, isn't really of consequence to them. We only make up about 7% of their exports, which is the top country, but the second highest country is at 6.9%. And so they can easily pivot to other countries to buy their products. The same is true for America. Indian motorcycle and Harley Davidson motorcycles, when faced with high tariffs out of the EU and Poland, they don't throw their arms up and give up and say they're going to quit making motorcycles. They find other customers. And that's what China and these other internationally diversified countries are going to do. And that's also what Canada and Mexico are trying to do. Canada's Trade Minister, Mary Ng, is flying around the world securing new trade deals with every country except the United States. And this is what I'm really worried about, is that these tariffs are not just going to be a short-term, you lower yours, we'll lower ours, but they're going to push away some of our closest friends and allies, and frankly, some of our biggest customers.
So are you saying that these tariffs could turn into almost an unintentional isolationist policy?
They very easily could. Look, you don't get rich by pushing your biggest customers away. You get rich by attracting new customers. This is what Ronald Reagan did in the 1980s by deregulating the manufacturing sector and by lowering taxes. He made it easier for American manufacturers to send their products to every country in the world. And we saw a massive growth in domestic manufacturing as a result. It wasn't an isolationist policy that he pursued. It was an expansionary policy that he pursued. And what President Trump is perhaps, and again, time is going to have to tell on this, but what he is perhaps kicking off is an isolationist view of the world, where the only people that are going to be purchasing American goods will be primarily American citizens. The fact is, we're only 5% of the world population. 95% of potential customers live outside of our borders. It would be foolish to not try to sell to 95% of the world. And so this is what I'm really worried about, are the long-term effects on these economic relationships that we have with other countries.
Well, then, David, really quickly before we go here, what's your response then to what President Trump says, what his supporters are saying? This is not isolationist. We're bringing in the manufacturing. We're bringing these big companies and their money and their investment and rich individuals into the country, and it's only going to make America better.
So we are seeing a number of companies investing in America, and that is certainly true. But as we become more isolationist, as other countries find partners to trade with that are not the United States, foreign investment could very easily dry up. And this foreign investment has been incredibly important for us. And it's not something we can afford to risk losing. They are helping us to build manufacturing plants. They're buying our treasury bonds. This is what we do with that direct investment from foreign companies. And as we see Americans have a lessened role on the global stage, my concern is that investment opportunities in the United States will dry up, and investment opportunities in other countries will start to ascend. This means that even American firms are going to start investing in foreign firms rather than investing in America. That doesn't bode well, and that is something that I think we really want to try to avoid.
Still a lot of uncertainty out there. We're going to have to keep an eye, see how all this plays out. David Hebert, thank you so much for joining us today.
Thank you.